This trader has a $15,000 live funded account. This is his equity curve here. Okay, so this is his equity curve. You can clearly see that, okay, the chap has started at 15,000. His stop loss, his maximum drawdown level is 13,500. Remember, that's your not just a drawdown, right? If this is your own account, you funded your own account with 15K, that's a drawdown. Yeah. For us, as a prop firm, that's your termination drawdown. That's your termination level. There is no way you want to reach that level. Let's stay away from that. Okay, so the key is I want to be as far away as I can from it. And you can clearly see, this chap over here has clearly, at no point has he come anywhere close to reaching his drawdown. That's fantastic. That's the first thing I'm going to look at. Is just how close has he been to his termination level. And you can see, quite frankly, even though now we've actually made it a little bit more easier for you guys, meaning that your drawdown level, your termination level is at 13,500, which means that it stays at that level. So it's a fixed level. Okay, so it doesn't change at all. This is where the bulk of his profits came in. And that is close enough to, 600 trades in. 600 trades in, he's gone to sort of, exceed expectations and really sort of gone to reach the target. His target was 10%, so he needed $1,500 to, and he surpassed that quite easily, right? And just note how this yellow line here, these sort of dotted yellow line that you're seeing over here, that just show me what's the highest level he's achieved at that point. Okay, so sometimes you can see that there is a big difference that does occur sometimes, and that means you're giving too much profits away to the market. You're not, trading your stop losses. You're not, maximizing the profits that the market's willing to give you. You want more, and that more never happens, right? So just being patient. You can see it's clearly sort of, reaching and sort of hitting those highs as well. So overall, you can see it's a great sort of learning curve for him for the first, 360 trades, and that learning curve's helped him sort of make a new high in his account. And then when he's 600 trades in, he's just found that momentum, he's found that edge that he needs, and he's just seen and reached his target in a not in a very quick manner. He still did take another sort of close up to 200 trades thereafter, right? But yeah, I mean, this is a great sort of equity curve to take away. Lot size he's maintained, it's around 0.045. Yeah, so I mean, it's taking very small lots, but just taking lots of trades. When it comes to the assets he's trading, you could sort of initially I can see how he's trading a little bit of a mixed bunch. So we've got mostly sort of the S&P 500, you've got gold, a bit of DAX, a bit of oil, and then thereafter you could just see it's just US 500, right? So S&P all the way through, S&P. It does come back. It does sort of look at some of the other assets again, but the majority of his trades are just trading, focusing on one asset. Now, that's good to see. I want new traders to be specializing. I want guys to specialize and focus and hone their skills on a particular asset. Really understand it from a fundamental perspective, from a technical perspective, from a sentiment and opinions in the market perspective as well. So it's important that you really specialize in a specific asset. But yeah, lot size, as we sort of spoke about, I mean, the majority of his trades are under 0.04 or 0.05. He's going buy sell, so there's there's no option. There's nothing sort of specific there. But this for me is great trading, and the question I want to ask him next is, okay, how much of the profits came from S&P 500, what about the rest of those trades? The other assets that he had taken. What were the times that he traded? And that's where we can do a deep dive into my fix.